Bitcoin is back above $65,000. But here's the question nobody should ignore. Is this the beginning of the next major move, or another rejection before Bitcoin falls back toward $62,000? Right now, Bitcoin is trading around 65,182s, with a 24-hour range of approximately $64,695 to $65,234, while the total crypto market is worth about $2,286 trillion and Bitcoin dominance stands at 57.2%. Bitcoin is currently up around 3.5% over the last 7 days, but the real story isn't simply the price, it's what is happening underneath the market. Bitcoin is testing the exact zone that has been limiting the recovery, and a sustained move above roughly $65,300 would give bulls their first meaningful technical confirmation that momentum is changing. From there, the next targets are $67,500, $68,000, and then $70,000. But if Bitcoin gets rejected again around $65,000 to $66,000, the first downside levels to watch are $64,000, $62,500, and then $60,000. And here's where the institutional story becomes extremely interesting. CoinGecko's current market feed is flagging fresh Bitcoin ETF inflows of more than $850 million, alongside reports of significant accumulation by BlackRock-related flows and whales. That matters because institutional demand can provide a stronger floor underneath Bitcoin when retail participation is still cautious. But there is another major development that could become even more important over the next few weeks: the U.S. Clarity Act. The Senate left Washington for its August recess without voting on the bill, but Senate Majority Leader John Thune has set up a path for a procedural vote after the recess. The legislation is designed to establish clearer rules for digital assets and determine which tokens fall under securities or commodities regulation. So the bill is delayed, not dead. And that distinction matters for Bitcoin, Ethereum, Solana, XRP, and the broader crypto industry. Now, let's talk about Ethereum, because something is changing there too. Ethereum is currently around $1,925, with a 24-hour range near $1,911 to $1,925, and its 7-day range is approximately $1,929 to $1,935. Ethereum's market capitalization is around $232 billion, and CoinGecko's current feed is flagging roughly $245 million of Ethereum ETF inflows, together with strong staking and whale accumulation activity. The key level for ETH is $2,000. If Ethereum can break and hold above $2,000, the market could start treating this as a genuine rotation into large-cap altcoins, rather than simply another Bitcoin-led rally. And this is important because Bitcoin dominance is still above 57%, meaning capital has not yet broadly rotated into altcoins. There is also a fascinating prediction market signal. Current poly-market probabilities shown by CoinGecko give Bitcoin approximately a 62.5% probability of reaching $67,500 in August, 33.5% for $70,000, and only 14.5% for $72,500. For Ethereum, the market is currently pricing approximately 72.5% probability of reaching $2,000, 41.5% for $2,100, and 18.5% for $2,200. These are not guarantees. They're market-implied probabilities, but they show where traders are positioning expectations. So what is my Market Pulse 360 outlook? Bullish, but not blindly bullish. My base scenario is that Bitcoin continues testing the $65,000, $66,000 resistance zone. If buyers establish a daily close above that area, the probability of $68,000 and eventually $70,000 increases significantly. My bullish scenario is roughly 50%, my consolidation scenario around 35%, and my bearish scenario around 15%. In the bullish scenario, Bitcoin breaks $66,000, Ethereum breaks $2,000, ETF demand remains strong, and the market begins rotating into higher beta assets. In the base scenario, Bitcoin remains trapped between approximately $63,000 and $66,000, while institutions accumulate and traders wait for the next macro catalyst. And in the bearish scenario, Bitcoin loses $62,500, which would put $60,000 back into focus. The biggest risk is that investors interpret weaker U.S. employment data not as a reason for easier Federal Reserve policy, but as evidence that the economy is deteriorating too quickly. The biggest opportunity is the opposite. Softer macro conditions, lower yields, continued ETF demand, and regulatory progress could create the combination needed for a sustained crypto recovery. And this is exactly what the current crypto conversation is focusing on. Can Bitcoin finally break $65K? Will Ethereum reclaim $2,000? Will institutional ETF flows continue? And what happens to crypto if the Clarity Act finally moves forward in September? Current community discussion is also heavily focused on the 65K resistance, and whether this weekend consolidation is accumulation or another rejection. So remember these numbers. Bitcoin $65,000 is the battlefield, $66,000 is the confirmation zone, $68,000 is the first major upside target, $70,000 is the psychological breakout target, and $60,500 is the level bulls absolutely don't want to lose. Ethereum has its own battlefield at $2,000. If BTC breaks 66K and ETH breaks 2K at the same time, that would be a much stronger signal than Bitcoin moving alone. This is no longer just about whether Bitcoin goes up or down. It's about whether institutional liquidity is finally strong enough to push the entire crypto market into the next phase. If you want daily institutional quality analysis covering Bitcoin, Ethereum, ETF flows, Federal Reserve policy, macroeconomics, gold, stocks, and the biggest developments across X and YouTube, subscribe to Market Pulse 360, because we don't just tell you what happened, we explain why it matters, where the money is moving, and what could happen next.